ICT Sun Cameron's 30 seconds model is built on top of what we already know, liquidity and fair value gap. But the question is, does his model works in the Forex market? This video is about that and we're gonna find out, but there are two big problems. Number one, most of you don't trade futures, and even if you do, it's probably Nets 100, the derivatives market. Neither way, the problem is that you don't subscribe to the future data, the market data. The second problem is that most of you traders don't subscribe to the trading view and you won't have access to the 30-second chart. In this video, I'll make some adjustment to the model to solve this problem for you, and let's find out if the model will work in Forex market. I will also show you how I will supercharge it. First of all, there are three parts to this trading strategy. Number one, draw on liquidity. I want to find out where the price is likely to go to. Number two, stop rates or stop hunts. Number three is our entry pattern, fair value gap entry. I'll always start looking for an O high or an O low on the 1 hour time frame. If you're still not sure which is the right draw on liquidity, the best one to start looking for is the time-based liquidity. This means previous day high, previous day low, session highs, session lows. For instance, Asian session high or London session low, even weekly low, weekly high. You get a point. That's a saying that if you treat the 1 hour time frame as your daily chart and study the lower time frame structure, a whole new world opens to you. And even if I can't find an obvious draw on liquidity on the 1 hour time frame, I'll drop down to the 15 minutes. First of all, once you identify the draw on liquidity, which is right over here, and the price is likely to draw to that level and we are bearish at that point of time, and I want to zoom into the lower time frame at that specific point of time. Once we go down to the lower time frame on a 5-minute chart, all we need is a stop hunt or stop rate above an O high right over here. The draw is towards the liquidity on the 1-inch time frame or even on a 15-minute time frame. Once we have that, we'll go down to our entry time frame, which is the 1-minute time frame. This is the previous 5-minute time frame. It can be 15-minute or 5-minute. This is the higher time frame where we took out the liquidity. Once we have that, we'll look for our fair value gap right over here. We're gonna take the trade by placing a stop loss 10 pips above our entry price, and we're just gonna target 1:1. Obviously, this is not the best risk to reward ratio, but this is based on the model, but I'm just gonna modify it to my own liking. Even if you miss the entry, you still have another chance to get into the market right over here on this fair value gap. This is a bearish scenario. Similarly for bullish, you just do everything in reverse. I'm just gonna quickly go through the bullish scenario. Once you identify the draw liquidity on the hourly chart, all you want to do is go down to the lower time frame, zoom into that specific point in time, wait for that liquidity grab. We're just going to move towards our draw liquidity on the 1-inch time frame. Let's just zoom into our entry. This is a previous 5-minute time frame. The liquidity has been taken. The moment it does that, all we look for is a bullish fair value gap. This is where we're going to place our entry. Follow the system. We're going to target 1:1. As you can see, this is not the most efficient risk to reward ratio. Even if you miss this entry again, you still can catch the next entry where we have another bullish fair value gap, and you can ride all the way towards the drawn liquidity if you want to. Now let's jump into Forex Tester, my personal favorite backtesting software, and I'm going to show you guys a lot more examples over there. As you can see on our time frame, we are drawing towards our previous O high right over here, and once we know that, we want to go down to the lower time frame on the 5-minute time frame to look for our liquidity rate. Let me get rid of this one. I really like Forex Tester. I can simply click on my hotkeys to speed up the backtesting. I highly recommend Forex Tester. This is my personal favorite backtesting software. I covered so many videos previously. Go and check them out. My confidence and my trading skills improved significantly after using Forex Tester. All we want to see on the lower time frame is a bullish fair value gap. That's where we're going to take the trade. So let's jump down to the lower time frame on the 1-minute time frame. By the way, currently we are trading the euro dollar. All right, so now we have a bullish fair value gap form. So we're just gonna place a buy right over here. Even though the strategy required to have at least 10 pips or 10 handles if you're trading futures, we're just gonna reformat, we're just gonna readjust our strategy. So we're just gonna place to the nearest low, and we're just gonna target not 1 to 1 or 1 to 5 or even 1 to 2. We're just gonna target the next likely high. Let me quickly recap why we took the trade. On the 1H time frame, as we can see, we are drawing towards that level, the draw on liquidity. On the 5-minute time frame, we can see that our old low has been rated. On the entry time frame, all we want to see is a bullish fair value gap form, and the price doesn't necessarily have to close above this level, and that's all we need. Once we have that, we place a nice stop loss in a safe zone targeting the previous old high, and we're just going to let the price to play out and see how it goes. So there you go, boom, we smashed take profit. For this example, let's look at a bearish scenario. As you can see, we have a relatively equal lows resting below all these lows, and this is our draw on liquidity. All we need to know is that the price is likely to move towards that direction. Doesn't matter how you get to there or how long does it take to get to there. So if we move down to the lower time frame on a 5-minute, for this structure, we can clearly see that this is our recent swing high, and all we want to see is the price to take out that swing high, and that's where we gonna take our trade if we can find an entry setup on the 1-minute time frame. On the 1-minute time frame, let's wait for that bearish fair value gap to form. We have our fair value gap form, and I'm gonna place a trade. Looking at the scenario, apparently we are not likely to get the entry, and this is a breakaway gap. So what I did was I took another trade at the bearish order block, and we have the price has respected the fair value gap and it traded lower, and it triggered in our trade. So the price continued to have a break of structure, and we eventually hit our target. These are the two things that I will personally change to my own liking. Even though a 10 pip stop loss is relatively safe, at the same time it needs to be relevant. If the trade doesn't really require a 10 pip stop loss, I wouldn't use such a big stop loss. I would just narrow it down to the recent swing high or a safe stop loss that I can place. For risk to reward ratio, personally I feel like 1:1 is still good. At the same time, my golden ratio, my perfect ideal one will be 1:2, and that's just my own preference. Or you can target all the way until the draw on liquidity. At the same time, please remember to take some profit off the table. It's always good to take some partial if you're targeting those huge profit target. Overall, this is a decent strategy. Personally, I wouldn't trade this strategy. I still want to stick to my own personal plan, personal strategy, which I have shared in my previous videos. Go and check it out if you haven't. Go and check out Forex Tester. It's a game-changing software that's part of my daily life as a trader. Forex Tester Analytics will show you your strategy performance. I'm talking about win rate, risk to reward ratio, drawdown. You can only grow what you measure. Check out the code and the link in the description. It's a cheeky 10% discount on top of what they are already offering. I'll see you guys in the next video.